Welcome back. I wanted to create a video for paid members to talk about small caps. I think there's always opportunity in small caps because they're not very well covered by the big media companies. They usually fly kind of under the radar, and we could have an advantage if we do our homework. We also have an advantage since we have a community of various investors. We have 50 plus members now, which is great, and the ideas on small caps are coming from all different places. So this video is going to be a little long. I got to warn you, but I'm going to cover probably about 10 small caps that I'm keeping my eye on. And I'll share with you why I'm watching these stocks. In some cases, I already own these stocks. In some cases, I plan to buy these stocks. In other cases, I don't own the stocks, but I'm watching them. I may want to start buying into them. So let's get into these small caps. I'll go through why I think these belong on my watch list, my buy list, or my portfolio. Let's get into it. The first stock I'm going to talk about is Ryel. This is a healthcare biotech company that is doing fantastic. Their last earnings had really high growth, and the stock is up 134% year to date. In the last month, it's gone up over 100%. Here's the frustrating part for me is we've been covering this stock for months, and I just didn't keep an eye on it. Their earnings were spectacular 2 weeks ago, and I don't use spectacular all that often, but I think it's appropriate when a company grows by 176%. I think if a company grows more than 100%, I can use the word spectacular. What's also really, really good is their margins and cash flow. Margins, 82%, cash flow, $65 million. So I updated my valuation on Ryel actually on the live stream last night. And it was Paul that brought up this stock a few months ago. He's an investor. Good for him. Man, I'm glad one of us is making money. Congratulations, sir. Nicely done on picking this fabulous stock. This sucker is still discounted by a big amount. Why is that? Because of that high growth. Growth of that amount it just doesn't come around all that often. A really small business that has cash flow, again, it's pretty rare. So I analyzed the company with a little bit of a conservatism. For example, I went with a high discount rate that brings down the valuation, and it pretty much calculates a higher rate of return. Even when I try to bring the numbers down, the numbers just really, really stack up. So although this stock has gone up more than 100% in the last month, I'm going to buy into Ryel. I don't want to wake up in 3 months and the sucker's doubled again or gone up 50%. Or I wake up a year from now and it's worth 3 times as much. These healthcare stocks are growing like this, and you can look at a good number of them. They tend to go up 300 to 500% over a couple of years. I think this one has a recipe that may follow that type of trend. So this one's red hot. Thank you, Paul, for bringing it up. And shame on me for not following it closely. I could have made some money on this one for sure. Zeta is the next stock, and this is one stock that I did not fall asleep behind the wheel, so to speak. I bought into Zeta. We evaluated it recently. I really like what I'm seeing. I like their growth. I like their size, $4.5 billion. It was up 7.1% in yesterday's trading. So out of the gate, I'm like making money on this guy, which is great because this stock is not overheated. Year to date, it's actually just up 6%. It's really sold off. Now, the market's selling off the stock that's growing at 40% and has margins at 60% and free cash flow that looks terrific. And when we look at the valuation on Zeta, it really comes up looking like it's a discounted company. It has a lot of upside, 38% discount. So I started a position on Zeta, and I also started a position on App 11, which is not a small cap, but in the same industry, because Zeta is doing software that helps companies advertise online, whether they're advertising on Netflix, Amazon Prime, wherever it be, YouTube, Facebook, all kinds of places. the Zeta software helps businesses do that. And I think that market's just going to continue to get bigger and more important. Oscar is the next stock, and we've covered Oscar quite extensively on the channel. I think this is still going to be a big winner long term. It comes with a very wild ride on the stock price. The last 7 months have certainly been wild, with the stock really reaching very nice highs at $21 per share, but then coming back down to earth. Yesterday, the stock did go up 6.5%, I'm sure because of the news that a lot of super investors have gotten into United Healthcare, and that's probably driving more enthusiasm to buy health insurance payers like Oscar Health. This stock has terrific growth, and I think once they get through some of these, if anything, negative stories, I think this stock's going to do fantastic. When I look at the valuation of Oscar and I try to be conservative using high discount rates, not getting, too over enthusiastic on the growth rates, I get a 55% discount. So I'm actually been buying additional shares of Oscar Health. So I think that stock is just going to be worth a lot more going forward. It's going to be a terrific small cap. AMR is a stock that is only $1.9 billion of market cap, but it has really good revenue. This is a material stock. This is a cyclical industry. PE, forward P is 13.85, looks really good. If these commodity prices have any kind of rally, this stock's going to rally as well. It's had a good month, although had a pretty strong pullback yesterday. I actually bought more shares yesterday. But this stock here, I think it's so oversold that it could bounce back to $200 per share on very good, if we have some good news stories, if we see commodities go up. So I think it's a pretty logical bet for me to put some money into this small cap, and it can't go any lower. We've had really low commodity prices, and these guys are still profitable, generate cash flow. So I think the upside is fairly good with very little downside. Finvolution is a Chinese company providing financial services in China. And this stock has had a good year, plenty of volatility. You can see that it's really sold off and really had really strong rallies. And this stock, I've started a position and got out because it had a pretty good sell off, but it had a terrific day yesterday. And China stocks have been somewhat quietly been doing really well. My Futu stock's up and things look pretty good. It has a pretty good dividend at 3%. And overall, when I value Finvolution, it's a good growth company. It's discounted by 65%. So this stock, another small cap that can really reward investors that buy the stock before it grows and before other investors notice it. Now, we talked about eToro quite a bit for the last 3 weeks or so, and this stock, for some reason, was really selling off. It was kind of weird because the fundamentals on this stock look great, but it had this really nasty sell-off while the stock has been just performing really well. You look at their growth rate, fantastic. They make money, cash flow, all those things are there. Stock reminds me of Robinhood, reminds me of Futu. And this, once it finds a bottom, I'm going to be buying shares of Toro. One of the things that made me be more optimistic about this stock is Chase Coleman, who's doing the best right now in 2025 from a super investor. He's an owner of eToro, and he's made a lot of really good bets, really picked the right stocks in 2025, and he's got a great track record. Additionally, I was given some information that there has been some outflows, but I think those are going to stop at some point. So eToro is going to be on my buy list. Overall, when I value eToro, it looks terrific. It's discounted by 66%. So it's going to be a small cap that is going to be a part of my portfolio. I'm just letting it kind of settle down and find a bottom. Once it starts to rally, I'm going to be all in on that one. I don't invest in a lot of apparel stocks, a lot of consumer discretionary apparel stocks, but Abercrombie and Fitch looks really good. It was brought up a couple weeks ago, maybe a month ago, and the fundamentals look really good. The company's growing top line, profitable, good free cash flow. They have a terrific PE ratio, and they're only 4.47 billion in market cap. This stock is sold off if we look at the year to date and the 1 year. So it's an opportunity to buy a business that should do well, maybe give a more than better average performance from an appreciation standpoint. Could also be an acquisition. I could totally see a bigger apparel company acquiring them. Abercrombie and Fitch is discounted by 41%. And as you guys know, I'm not a big fan of apparel companies. So when I did this valuation, I was very fair, but probably a little conservative. 41% is pretty solid. They do really good free cash flow. So this is on my watch list of small caps. And the final stock I'm going to cover on the small cap video is going to be Upwork. This business is all about the new economy of the gig worker. I really like that concept. I think it could be a expanding market. Their addressable market can continue to expand. I like that about them. I also like that they're a really small cap. I like that they're an acquisition target. I could totally see a Google Alphabet, a Meta, a Microsoft, somebody bigger acquiring these guys because they have a really neat, differentiated um, online business. So I really like that. $1.83 billion of market cap. They have really low PEs. The growth rate isn't fantastic, but I think that the market's going to continue to expand. The stock is not overbought. It had a really nice rally after earnings. That was terrific. And I think their earnings had flat revenue, but an optimistic outlook. So the stock really did take off. Upwork is highly discounted, 56% discount. So there's really good upside in this stock and very little downside, in my opinion. I hold this stock in my older son's portfolio that I manage, and I'm really glad I've got it in there. I think if this one worked, this is going to be a 5 or 10 bagger because, again, it's part of a new industry, and I think it could really take off. So that's a wrap on the small cap review. I'm going to be doing this video probably every couple of weeks, and let's keep talking about these small caps, keeping an eye on them. I don't want the situation on Ryel to come up for me again. It doubled in value in a month's time, and if I would have paid a little more attention, I would have probably got into that stock. So a few dollars got away from me, but let's get the next one. Thanks so much for your support. And I really appreciate your interest in small caps. I appreciate all the ideas. Keep them coming. Let's keep looking at these small caps and finding where we can find really good investments. Thanks again for everything. And I hope you found this content interesting.